Hello and welcome to the Investing Master Series. My name is James Boyd. Today's date, October 28th. I don't know about where you are, but I walked out to my truck today and there was frost on the windshield. Yes, it is that time. We got to be tough now. All right, we'd like to welcome everyone here. We got Barb in the chat. We welcome her, Mrs. Fleeg, as she's calling herself, or Fleeg 2.0. Yes, a little fun with Barb there, but it's always meant for good. And also we got many of you here today, such as Silas, Will, Ann, Lena, Gina, Ray, Gary, JP, and many others. We also got Orlando Rafael Nadal with us here. Tennis, very good tennis player. Orlando, you can't fake us out. We know you're probably going to the top, the ATP 1000. So let's go ahead here and hop right in. Now remember, you can follow Barbara and myself on X. There's my handle at James Boyd CS. Barbara will post her handle in the chat as well. Join us there. Also, we do post educational content and announcements there as well. Just real quick as we get going, remember, we'll talk about stocks, but we will occasionally bring up options as well. Remember that options carry a high level of risk and are not suitable for all investors. Now, the information we talk about here today is provided for general informational purposes only. Also, Schwab does not recommend that their use of technical analysis as a sole means of research. The paid money software application is done for educational purposes only. We're engaging in simulated trading that is not real money. And so sometimes when it's not real money, you don't feel the real emotion. So that's why there can be a difference between paper and real. Okay. Also remember that investing involves risk, including loss of principal, and also past performance is no guarantee of future results. And also, when we talk about short options like cash secured puts or covered calls, those short options that you sell, they can be assigned, okay, at any time up to the expiration, regardless of the in-the-money amount. And we also, when we kind of talk about stops, remember that the execution of the stop order will be at or near the stop price, that there's no guarantee it could fill lower, especially as we're around earnings. And I'll show an example on that of IBM. Now, first off, I want to kind of set the table here for just a second. This is called Investing Master Series. So in other words, like, what is the learning outcome of what we really want to become proficient in? Now, some of these things, when we talk about strategies, it might be different for you, but the first four things I don't think are different, okay? So number one, if we kind of said, well, what should we be taking away and learning from this class? Number one is you better get good as far as reading market posture. You have to be good at that. If you're not good at market posture, you could be putting on trades or investments that are not in line with the market posture. A lot of times, investors, you're trying to put on trades that match the market posture so you can get the market in general to help your stock position or sector and so on. So reading the market posture is critical. Now, I've had 25 years of just pretty much working here, but I tell you what, there's some people that I've seen, and this is exterior to Charles Schwab. There's some people that I've seen that are not good at reading market posture, and there's some people that they're amazing at it. I know who they are, okay? And I share those things on X, okay? So just got to keep in mind, that's number one. If you can't read the market posture, it's hard to know when to put on positions, okay? Second thing is relative strength of sectors. The goal is not to be invested in one sector, too risky. Maybe the investor says, I just want to do technology stocks by itself. I'm going to say in this case, the goal of the paper money account, which we said from the beginning, was to have 3 to 5 sectors. And the goal is to find where are those 3 to 5 sectors that the paper money account could invest in. It doesn't want to be top heavy in just one technology. It's trying to spread the capital over 3 to 5 sectors and not just growth areas, okay? So when I say growth areas, I'm talking about tech, discretionaries. I'm going to throw in communications. The goal is not to have the paid money portfolio just in those 3 areas, trying to have some financials, trying to have some industrials, trying to maybe actually have one that's maybe an income as well. Spread it a little bit. So that way, if technology goes down, the portfolio is not just in those areas. So how many sectors? 3 to 5. That's what the paid money portfolio is doing. Now, the biggest actually thing is watch lists. We need to become proficient in actually looking at and having that routine in looking at the Dow 30, NASDAQ 100, and the S&P 100. You can look in the S&P 500 at the top. The reason why we look at the S&P 500 is because, well, you got home building stocks and airline stocks. Outside that, you're pretty much going to duplicate what you actually see in the S&P 100. But if you're not looking at the Dow 30, Nasdaq 100, and the S&P 100, you're missing a major point, okay? That those are the ones that tend to be liquid, and they're owned by institutions that could pump up or push down the price, which could cause trends. The fourth thing is if the investor says, look, what do I need to actually focus on from this class is we got to become really good at reading bounce setups and breakouts. Now, you could honestly say that a breakout could be a moving average crossover. You could actually say a breakout would actually be, for example, like a flag. You could actually say a hold, that is a bounce, okay? That's a bounce setup. And the last thing I just want to kind of say and kind of saying what are the 5 learning lessons we need to take from this class and become proficient at, and why we meet on a weekly basis. This is not a one-off class. Number 1 is we want to be good with stock trading in terms of swing trading, maybe 2 to 3 days to 2 to 3 weeks, and trend trading. Now, I'm going to tell you right now, I think all of us, if we gave ourselves critical feedback, sometimes we're horrible. There's trends galore, and sometimes the investor, and myself included, are not on that trend train. Now, hopefully we have some time left in our life to actually overcome the past missed opportunities, but we want to actually become proficient in looking at swing trades and trend trades, because sometimes there are some short-term opportunities, not just intermediate to long-term. The second thing I want to kind of bring out here, and let me kind of move here just real quick, that we want to kind of focus on, if we're talking about strategies, okay, and I'm talking about bullish strategies here for just a second. When we look at this, obviously I just said stocks, okay, but another way to try to get long stocks, to try to be long stocks, is short puts. Now, some of you might say, well, I don't do short puts, and I'm not going to. Fine, you can choose for yourself, okay? Some of us like short puts because we're trying to sell puts on stocks that we're trying to own anyway, okay? Now, so that's the second strategy. The other strategy that we're probably might want to consider, maybe, if you said, James, I like a lot of the stocks, but I want to kind of use leverage as a way to try to ride the trend, whether it's swing trade or trend trade, but I just want to do it from a leverage perspective. Long call and a short put combined, known as a long synthetic, trying to replicate the profit loss diagram of a stock position, but just not tying up as much capital, okay? So those 3 to me would all be pretty much on the same line. Number 1, you're buying the stock. Number 2, short puts, you're trying to buy stocks, you bought the stock or considering buying it. Short puts, you're trying to buy it. And long synthetics, you're replicating the stock position through options. To me, that's all like we're saying the same thing. Now, from that, if we did a stock position, probably want to actually have an idea of what covered calls are, because sometimes the stock hits a resistance and maybe starts to pull back a little bit. And if the investor said, I don't know anything about covered calls, well, that's the first way you could really learn about, as you're a stock investor, you actually say, hey, look, I want to try to make money from time decay. Now, the biggest actually thing is with that is covered calls and collars. Now, the covered call, you need stock. Callers, we need the stock in our examples. So if you kind of think about, like, say, covered calls and collars, it comes back to the stock. So this is why the stock is so big. If you can't read the trend, no wonder you don't do covered calls. No wonder you don't do collars, okay? No wonder you're not comfortable in actually doing short puts and so on. It comes back to reading the chart, okay? Now, I'm going to tell you right now, it takes some time, but my job is actually help you learn it faster. That's why I talk 2 times speed, so we could actually try to put it in our brain quicker. Now, if we said any other types of positions that maybe the investor might want to become or consider becoming proficient on, is short put verticals and long call verticals. Okay, so from this class, if you said, hey, what are those strategies that we're going to focus on? These are them. If I said at the end of maybe a year that we didn't do examples of these, I would have failed as a teacher. Okay, fail. Okay. Now, the short put verticals, we're talking about an income strategy, not as it's probability based. Okay. The long call vertical, you're trying to take a directional position on purpose. Okay. So here we are kind of like what, 2 months left. I want us to kind of be thinking about where these portfolios have gone. Where did they start? Where are they now? And then how are we using these 5 learning points from taking this class? Okay, 5. Now we talked about, let me repeat those 5. Let me summarize it. Number 1, market posture. You got to be good with that. Okay, it's going to determine your entries, your exits. It's going to determine changing of the strategies if you do that. Second, relative strength of sectors. Third, having confidence in looking at the list of the Dow 30, NASDAQ 100, S&P 100. You can look at the S&P 500. Yes. Why? Home builders and airline stocks. That's mostly what we look at those for. Better know what the bounces are. Hold and CHGs. And you better be good with breakouts, because really everything comes back to those 2 doors, so to say. It's either a bounce setup or it's a breakout. You could call it whatever you want, but it's a derivative of those 2, if we're being honest. And the last one is when we actually talk about, let's say, the strategies. These are the strategies we're going to focus on. Now, these strategies are not bearish. We have to have a starting point, okay? And usually the starting point for many investors is bullish. All right, now that we set the table, let's kind of talk about kind of some of these things that we're seeing here. No, we won't look at Tesla right now. If we take a look at let's say the SPX, and so when we talk about identifying the posture of the market, we like to just kind of go back to the trend candlestick chart, okay? Now, when we actually look at this, and the reason why we created this, okay, it was my idea, but someone wrote the script. So that's why I said it like that. I didn't write the script, someone else did, but it was my idea, okay? I got sick and tired. If I ask 10 different people what the trend is, I get all types of different answers. Then I'd ask the same 10 people, what do you think the market posture is? And sometimes they would change the way they looked at things depending upon how their portfolio was doing and so on, and it wasn't consistent. So the purpose of trend 1 through 5 is to try to be more consistent and have a categorical way to read trends at the moment in time that's not changing based upon my preference, my emotions, and so on, okay? Now, if we looked at this chart, we got green colored candles. We know that is a trend 3. Now, trend 3, it's not guaranteeing that it's going to be that tomorrow, but it's just saying, hey, the price is above both moving averages, and we actually got in this case. We're not up near an area of resistance, the keyword is yet. Now, that S&P, I feel like my voice is going to go hoarse saying this all year long. Oh, new high again. New high, okay? I know some of you are sick of that. I'm sorry to be the bearer of bad news. New high. The NASDAQ hit a brand new high. I feel like I'm getting tired of these. And then you look at, let's say, Dow Jones itself. Does that go to new high? Just tired of those as well. Man, if you're a bear, if you've been waiting to kind of like, when I say bearish, I'm saying the portfolio is bearish, meaning you're short delta, okay? So you have bigger positions that are negative delta that's making the portfolio negative delta. You could have 2 bullish trades and 7 bearish trades. Your portfolio is probably bearish. You could have 10 bullish trades and 2 bearish trades, and you're still bullish probably, okay? Just look at your positive. Just look and see your delta column. Are you positive or negative? If you have positive delta, you're bullish, okay? Negative delta, you're bearish, okay? Just because you do a bearish position doesn't mean the portfolio is bearish, okay? Now, if we take a look at the rut, the one thing we will notice on the rut, we haven't broke out on the rut. Rut is kind of lagging a little bit. You'll notice actually on the rut, we're kind of going through this flag type of area right here, this consolidation, okay? Now remember, we can see where the consolidations are because they're the non-green candles. We could see where the pullbacks are because they're the non-green candles. Keep an eye on the Russell. We know that the one thing we would actually have to say maybe negative about the NASDAQ, S&P, and the Dow Jones is, man, they've gone up, they've popped. They're probably prime candidates for getting a shorter-term pullback. I think the thing that we would probably actually say right now is, could maybe some investors profit take on the S&P, NASDAQ, and the Dow stocks and come back into the small caps? So I think probably midweek here, I'm saying Tuesday's midweek, could we get a bounce into the end of the week as the Russell tries to play the catch-up trade? Okay, now, some of you are asking about the the trend script. Let me send that to you right here. So this right here is the script for the trend. Now this is always what kind of blows my mind a little bit. I want to make sure we're all like, are your eyes on me right now? I just want to make sure. So here's the deal. The script I sent you in the chat, if you say I don't know how to put on the script, it's the same way with every script, okay? We're just going to go to the very top right, setup, open shared item. That is not hard if you're paying attention, okay? Set up open shared item. With what I sent you in the chat, what you're now going to see is I'm just going to copy and paste in there. Control V for paste. And now, what do I do now? Well, the only thing you can click on is preview and cancel. We don't know how to cancel. Preview it. And now what you're now going to see is we're just going to say, oh, there's the chart that looks like the one that's right behind us. Exactly. Let's import that bad boy right into my platform. Thank you very much. We click on that, and then there's the trend chart. And you're now going to see there's the mini chart. How do you save it? I'll just click right to the right of where it says the package and go save grid as. And you do that over and over and over. And it all started by going to setup, open shared item. Not that bad if we're paying attention. So please, if you say I don't have that yet, please accept my gift. Okay? It always hurts my feelings when you don't take my gifts. Okay? Now, second, so when we talk about market posture, we'd actually have to kind of say that the market posture is, in terms of equities, quite strong. Now, the one thing I want to do, come back to for just a second is, we know that if you say, well, James, this is the playlist, okay, for this class, okay? So if you say, James, I want to go back and kind of review some of the previous classes. That's good, Barb. You need to. Barb, she's a tough gal, and we mess around with each other. It's pretty funny. We just poke at each other. Now, here's the deal. So this is a playlist from last week. We actually talked about, is the precious metal sell-off good for stocks? Speaking of that, let's actually go back to something just real quick, kind of where those precious metals. Now, gold. Now, this is kind of interesting because my son, I gotta be quiet because my daughter's upstairs. Okay. And my son said he wanted to marry his girlfriend. And I was thinking, man, the timing of this is actually kind of nice because maybe those gold prices, et cetera, will come down a little bit for the ring. Now, if you take a look at this, notice when you take a look at gold in general, it's fallen down to the 30-period moving average for the first time in a while, okay, to say the least. We haven't even touched the 30-day moving average since August. So here we are 2 months later, and we're finally touching. Now, remember, it's not just on gold. You're actually seeing it on high-ho silver as well. Now, when you take a look at this, this is what I was kind of saying. If people are selling out of this, it's not like they just sit on the money. They don't just typically put it in a drawer and say, I'm going to wait. They go look for other things to buy. So that's why I kind of called last week, is the sell-off in precious metal good for stocks? Because they might take the gains potentially from those precious metals and they might move it to those sectors. Speaking of those sectors, let's just take quick inventory when we talk about the sectors. Now, I cannot share with you this list. If you said, well, I don't have the list, well, write them down. If you said, I don't actually have the headings at the very top, you can go to my X page and you can grab them there. Now, the biggest thing that we want to see from this is when we talk about relative strength, we're really looking to see what is the 1 week performance, because that's momentum, okay? When you look at the 1 week performance, and sorry, I'm teaching right here, I'm on YouTube, so it's bogging down my internet, but the biggest thing is you want to look at the 1 week to see momentum, okay? We're looking at the 1 month, 21 days of trading to really see trend, okay? Now, if I kind of categorize this by, let's say, 1 week, technology and discretionaries are at the top, there's your momentum sectors. If I actually saw in the 1 month that it's actually the same, well, you got momentum and trend. Well, that's not a bad thing, okay? So that's the biggest thing. Now, if we kind of said which ones are a little stronger, we'll fast fire. If I said, for example, is technology strong? Well, of course it is. It's related back to the NASDAQ. If we actually said, what is discretionary strong? It is strong. And what do you notice on discretionaries? Now, I'm going to tell you this right now. A lot of times people are late. Now, there's a little joke in technical analysis. And it says a lot of times that people, the only time they're early is when we're at their funeral. Okay? It's the only time that they show up early. Okay? The biggest thing in that, now that's a technical joke. Okay? That's been 25 years plus. I'm not sure if we want to go there. You want to be thinking ahead. You want to be thinking about what's the trend, what's the pattern, etc. If we take a look at this, the one thing we will say is, do we have a pre-existing trend? Yes, it's up. Second, do we actually have any pattern on this? Now, you better say, my gosh, there's kind of a pattern on this. We got a prior high, we have a little yank back, and then here we are right back or up to the top. Now, you could call this a V pattern, a U pattern. I don't care if it's called V or U. Moral of the story is it's showing a potential continuation of trend. Now, if you said, well, I haven't been looking at discretionaries. I don't have anything in discretionaries in the paid money portfolio. Neither have I, do I even have a watch list? You're not prepared. You're not taking seriously the things that we actually talked about. The watch list for discretionaries, you can go right back into, let's say, Market Watch and come up with an immediate watch list. Let me tell you how long this takes. Market Watch, visualize. And if we said, hey, we're going to take discretionaries, if I take discretionaries, I just made my watch list. Okay? Now, here's the deal. If you said, James, I just really like the big boys and girls, okay? You might say, I'm just going to take Amazon. I'm going to take Tesla, Home Depot. The stocks that have the bigger boxes are the ones that are the bigger market cap. Market cap, share price times the number of shares outstanding, okay? And what you're going to notice is you could say, look, I just want to kind of take the bigger boxes, and I really don't care about TPR. Fine. Have it your way. Now, the other thing is we could also go to, let's say, the SB 100. And if you said, James, can I just go to the SB 100 and just trim it down this way? Sure, you could. Okay. Now, when you go to the SB 500, we just get more stocks with different market caps. But this becomes an immediate list. We got to stop thinking we're going to search for 4 days when the list is right in front of our face. Okay. And it's right there. Okay, and this is where I think people just look past the simplicity. Okay, now the one thing I want to kind of pull out here is I also want to kind of make mention of when you look at the communications, that's another one. If we kind of said, is this bouncing or breaking out? Well, if we kind of said, where do we see resistance? That resistance on that chart is right here. You can't say that we're not seeing it. There's only 10 sectors. And if we're doing this on a daily basis, we actually see discretionaries actually pushing to the upside. We see communications actually maybe getting a horizontal breakout. We should be looking at this, okay? If we're doing the routine, you know this. Now, from there, we actually go back to, same thing we did, what are the stocks that are in communications? We'll come to that in just a sec. And the last one I kind of want to point out here is industrials. Now, industrials, we've kind of pointed out yesterday, it has also had something where we had a prior high, fell back down, push back to the upside, doink, brand new high. Now, I want to say sorry. What are you saying sorry for? Someone said in the feedback, stop saying doink, okay, things like that, little sound effects. I'm sorry, I won't say that again. New high. Okay, there you go. New high, okay? No more sound effects on new highs. But if we take a look at same thing, we like to be thinking about what stocks are leading the push. Now, remember what I said yesterday. The investor does not have to buy individual stocks. They might just look at buying the group, okay? Now, the other one that we're going to kind of keep an eye on, can we get midweek into the end of the week? Could we get a little reversal? It's financials. So those are the ones that are kind of standing out right now. Now, so we talk about market posture. We talk about relative strength. Now, you could visually look at the relative strength because if I showed you, let's say, is staples like technology, you should be able to visually look at this chart and say, no, it's not. I don't need a listing per se. I can see it with my own eyes. Okay? Does that make sense? Now, what I also want to do is now let's kind of talk about some of these. I need to talk about, first off, a couple positions in the paper money portfolio. Why? Well, because it's tying up our capital, and we need that capital to put on new positions. Now, in the paper money portfolio, okay, so we have a balance here, 40,000. Cash is negative. And what you're now going to notice is we're going to have to sell something so we can put on some new positions. Now, sometimes we might have some gains that could be taken off, and so we need to talk about this just briefly. One of the ones that I noticed real quick, which we talked about, I'm going to talk about from an option perspective and a stock perspective. We sold the 285 put and had downside protection at the 210, okay? This is really a short, wide vertical with a bigger max loss, bigger credit. It's at 82%. Now, I want to show you just real quick the difference between what happened last week with IBM, and then what you're going to notice is IBM goes over the earnings, wild push down. Now, why do I bring this up? Well, because we did an option trade and a stock trade. One of the riskier things about stocks is that, well, you're dollar for dollar. The delta is 1. Okay, you buy 1 share, stock goes up $1, made $1. Stock goes down $1, you lose $1. You have unrealized gains and losses. Now, why do I bring this up? Well, because last week we talked about doing a small position on IBM, not a large position. We did it small on purpose to go over earnings. The entry was there, the stop was there. $18 down on 5 shares, lost $90. Now, this is kind of where the options are kind of interesting. The vertical position, there is no stop. It's a built-in maximum loss. Hallelujah. I heard someone say hallelujah. Okay, now, what you're now going to notice is the stock loses $90, but the cash secured put, that's a little bit more forgiven because the delta is smaller. It can take more heat. Well, it was up $693. So the wash of those positions was $600 pre-commission. So what I'm going to do in this case is we're going to take this down. Sold for $920. Now remember, this goes back to what we said. Stock, yes. Second, we talk about short puts. Now remember, the 285 put, that is a cash secured put, okay? Now what we did to actually tie up less capital, we actually bought the 210 as downside protection. Now what I'm going to do right there is I'm going to buy it back for 155. That's at 83%. And that, what you're now going to notice is we're going to try to buy it back for 156. Now just because we put the order at 156 does not mean it's going to fail at 156. We got to make sure that it gets a fill. Now, confirm and send the order. And notice what it's saying. You're buying it back for 156, giving some of that credit back initially, plus the 65 cents. There's the total. Now, if we do this, what you're now going to notice is we want to verify with our own eyes in the first 2 to 3 minutes, does that fill? Now, if that fills, then the buying power effect is actually going to start to come off, okay? Or comes off. There it is. So now the buying power effect, because they're holding some of the capital to buy the shares of stock. Now, James, could we sell that put? Yeah, you could sell it. Not a whole lot to sell. I won't take the time to do that right there. I'm not going to, okay? Now, the other one that I kind of want to at least make mention of just quickly is Microsoft, okay? Now, by the way, when was that position put on? That was put on September 25th. So it had been on for about a month, okay? Now, this one right here, just real quick, is Microsoft. We really got a classic short put vertical. I'm not going to talk about it from that perspective. We're going to go to the IRA account just real quick. And I need to ask you a quick question. Now, I want you to think back to Microsoft. We got out initially, okay? But then we saw Microsoft come back to the upside, and we bought it again when it showed some entry setups. This trade was done on the 23rd. So when you go back and look at this position, we should go back and say, well, what did Microsoft look like on the 23rd? And after this, we'll spend the rest of the time talking about new positions. But what you're now going to notice is the 23rd was right here. So if I was taking this class and I said, well, what was that person seeing at that moment in time? He or she, in this case, the paper money account, non-male or female, the paper money account was actually buying a trend 3 setup. Didn't know exactly that it was going to go up, but what you're now going to see is with today's price action, it went up near the prior high. Now, the prior high is not a resistance. It's potential resistance. That's why they call it a high, not resistance. Now, for some investors, they might say, James, I want to sell into the strength, thinking that this might come back down a little bit. Now, yesterday, we talked about those moving average envelopes. And we said something yesterday that when that stock, it was actually, excuse me, it is over here. Let's actually go back to that. There it is. We said when that stock, let's pull up the right stock here, Microsoft. When that stock actually starts coming, let's say 5% above the moving average, the blue line, 7%, what tends to happen? Do people tend to buy more or do they tend to profit take? Now, if it was you, just tell us who it was, so at least we could know who it was. Now, think of this as Bollinger Bands, right? The higher you go away from the support, the potential moving average, the greater the statistical chances that people will just say, look, man, I made some dang good money on this trade. Some traders might say, I want to profit take because now I think it's going to pull back down. Well, and you're going to notice how often does it get to the red line? Not very often. How often does it get to the white line? Not very often. So what we're going to do is we're going to try to sell Microsoft into the blast off to the upside here. Now, James, why didn't you sell it this morning? I didn't have the class this morning. Okay, not at 7:30 my time or 9:30 Eastern. I had to wait till the class started. So what does that mean? It means that it gave back a little cheese of the trend. Now, it was just 20 shares, just 20. Not everything can actually be 100 shares. Now, what you're now going to notice is on Microsoft, we're going to right-click. How do you sell it? When in doubt, right-click, create closing order. And what we're going to do in this case is we're going to sell those shares of stock, okay? Create closing order, sell. Now, stock position. Selling 20 shares. Don't have to sell 20, but we are going to sell all 20. You can sell some. Okay, we're going to sell all of it. And then what we're going to do is move it to the mid price. Confirm send and see if that trade can actually fill. Now, those 20 shares, if we kind of looked at this and said, you know, not bad, 450 bucks or so on that little trade right there, not too bad. Now, the other one we're just going to kind of make mention of, I won't kind of at least do any new trade on it. Tesla's gotten a little push here. If you go back to Tesla, there are shares, 11 shares to be exact, got a little push. And if we go back and kind of zoom in on this, there was a hold there yesterday. Today's price gapped up a little bit and pushed a little bit more. Now, I know how you feel. You always want more. It makes sense, okay? Now, I want to kind of talk about any questions. Now, Austin, you actually said, please share the chart. Are you talking about this chart? If you're talking, okay, I think what you're talking about is, well, so here's the deal. Let's not, why don't we just share all the charts, okay? So first off, if you said, hey, can you share the grid? Sure, we talked about this yesterday. Let me just answer that question. I'm going to share the grid. This right here is the grid, okay? Let me send that again, share grid. And I'm also going to share just that one chart. Okay. Now, if you said, hey, I just want this one chart, okay, maximize sell, let me share just the chart itself, I'm going to put that in there. So in the chat, what you're going to notice is the first chart link is for all the charts that we actually have in the grid. The second one, the link is actually just for this chart by itself. All right. Any other questions? Okay. Now, the one thing I want to kind of make mention of is a couple stocks that we're going to point out. Now, let's kind of go back to, let's say, what were kind of some of those strategies that we talked about? Well, stock strategies, short puts, long synthetics, cover calls, collars, short put verticals, long call verticals, okay? So when you attend this class, we want to get a nice dose of kind of practicing these strategies. Now, I'm going to kind of come back to kind of one that we don't normally talk about that kind of had some interesting news on it today, namely PayPal. Now, PayPal, for example, is actually now in the wallet of OpenAI. They announced that, and what you're now going to see is, if you take a look at this, they had, the estimate was 119, the actual was 134, and they announced that new deal, okay, being in the wallet of OpenAI, etc. Now, if you look at this, we got to go, let's say we go back and say, well, could we consider stock, short put, long synthetic, which one? It really depends upon how bullish do you want to be. How bullish do you want to be? Stock and a long synthetic, those are the most bullish strategies, the highest deltas. If you said, I want to be less bullish than that, then we would actually really say a covered call would be right behind that. Covered call typically has a delta probably 60 or 70. If we said, well, I don't really want to own the shares of the stock, but I still want to be pretty bullish, we'd probably be thinking about a short put that actually probably has a delta between 30 and 40 if that's the strike that you picked. Okay, so what I'm going to do is on this is I'm going to go to the short put. Now, if we said a short put itself or a short put vertical, well, short put vertical actually doesn't have the same delta as a short put does. Short put is more bullish than a short put vertical. Okay, so that kind of have an understanding. If you do a short put vertical, you have a lower maximum gain. You actually are typically and you're actually going to have a smaller max loss. In our short puts, we're going to do a sell the put, but then buy downside protection. That downside protection is also going to come with a out of the money put. And we're going to focus on a delta of 10 or less. Why? Well, because if we did the trade, let's say in the IRA, etc., it could tie up a lot of capital to sell those puts. So trade example number one, let's practice here, okay? Short put, out of the money put with a, and let me say it like this, out of the money long put with a delta of 10 or less. Let's go try to practice, okay? So what I'm now going to do is let's go to this. Let's go to right on the paid money count. Let's go to, let's say, 20 to 50 days to expiration. Purpose of that is you're trying to have the time decay on your side, okay? Now, could we go a little bit farther out? Sure, okay? Look at both. Now, we start by looking at the monthly options first, okay? First, because that's where there tends to be more liquidity. Not always, but tends to be. Now, what I'm going to do is our eyes are going to focus on kind of maybe the 30 to 40 deltas, the ones that are out of the money. Now, if we looked at the bid-ask spread here, you got 9 cents there and you got 24 cents there. What do you see so far? Well, geez, the Novembers look tighter on the bid-ask spread. Still got 1,900 contracts right there. So what I'm going to do is I'm going to open this up now. We're going to look to do the 21st November, sell the 75, and then buy a put with a delta of 10 or less. Well, how do you know which one to buy? Well, the same thing. We're going to go down and look and see where's liquidity. Delta 10 or less, 16 cents, 2 cents. That looks interesting, just pretty tight, and 5,100 contracts. What we're going to do is we're going to sell the 75, and then what we're going to do is we're going to buy, which one? Where's that 5,100? And you're now going to see it's literally the 67.5. Now, if we did this right there, what you're now going to notice is if we sell the 75 and then we buy the 67.5, what you're going to see in this case is we now have a credit there. Now, remember, the selling of the put, you get a credit. You buy the put, you actually get a debit. And so in this case, what you're now going to notice is we see in this case, we're going to get a $1.30 credit. Now, we know that that is not you got to actually compare this. And what we're comparing is we're saying, hey, look, if I get a $1.30, how much is that relative to what? The stock price. Because a $1.30 on a $1,000 stock versus a $1.30 on a $77 stock, it's a different percentage. So we express it in a percentage, $1.30 divided by the stock price, $77.96. What's the percentage? Answer, 1.66. What's the floor that the paid money wants to get? Answer, 1.5% or above. Could you go lower? Sure, you can do whatever you want. Our examples, We want 1.5%. Why? Because we're trying to make sure we get paid for the risk. Okay. Now, someone told me one time, well, I don't really pay attention to what that percentage is. That's a crazy comment. Because if you don't think what that percentage is, do you really understand that you were the one taking the risk? And you're saying that I don't pay attention to the percentage? I think you do. That's about as odd as saying I go to work, but I never asked them how much I made. Odd? Okay. So not every comment might be a good one. That's not a good one. So if we take a look at this, we're going to go to the mid price, 132, confirm send. And now you see trade number one. There it is. Now remember, break even. It's going to be the short strike less the credit. Okay. Max profit, max loss. On this trade, okay, there is a built-in max loss. Now, this is not your typical vertical per se. It's not that far off, but what you're going to see is the max loss is a little bit bigger. We talked about yesterday why would someone do this? They're trying to trade probabilities. Does someone have to sell the put and buy the put? No. Someone buys the put if they just want to cap the loss and have a lower buying power effect. Now, Chris actually says, James, is there a better measure than R to R? I don't know of any. Okay. When I'm actually looking at kind of the percentages, that's the one number that I'm always looking at. Okay. Now, whenever you now the way my mind kind of thinks about this, I'll just say this fast. If you had an IV of 15 to 24, okay, and I'm talking about IV, okay, 15 to 24, okay, that's the IV. And we're talking about options that are 20 to 50 days to expiration, okay? So 20 to 50 days to expiration, we're thinking that's probably going to be a 1.5%. Now, is that always? No, but if we ran the number, the option premium, OP, divided by the SP, the stock price, and you get that percentage that we've been doing. What's OP? Option premium. What's SP? Stock price. And it gets a percentage. If we ran across one that has maybe, let's say, 25 to 34 implied volatility, it wouldn't be a shocker that it's 2.5%. And then if I saw something that had an IV of 35% plus, it wouldn't be a shocker if, for example, that it was 3.5%. Now, what might kind of lead us to say, hey, we're not getting that? Well, if we're not getting, let's say, kind of these ranges, it probably tells us that A, we're kind of coming closer to the bottom end of the range of the duration of time. That's number one. You have less time decay, so the option premium is less. The second thing is we're maybe selling a put that's a little bit farther out of the money, a little bit. And we did a little bit. The other thing it could actually be is, did you buy a put below, which we did, that actually is pushing down the option yield? And we did. So those three things can kind of push down the percentages. Okay. All right. Now let's kind of go back to this just real quick. So hopefully that helps. So I'm going to send that order. Note that. There it is. Now, a couple of the other ones we're going to kind of keep an eye on in closing here. A couple of the ones one of them that we actually mentioned yesterday, we're going to continue to watch is we did see Apple yesterday make a brand new high. Now, you Samsung people, okay, and you know who you are, okay? You got Apple people and you got Samsung people. We love all people. We're just having a little fun here. But Apple did make a brand new high here today going into the earnings. Now, you got Apple with earnings coming up on the 30th, and you got Amazon. Now, Amazon, I want to kind of throw this out here. Two companies that yesterday announced some pretty decent sized layoffs. Now, you got to consider their workforce, okay? How big is your workforce? How big are the layoffs? Look at as far as percentage, not the number, okay? Now, the number does become a percentage, but you have to look at the layoffs relative to their workforce total. When you take a look at Amazon, keep in mind some of these companies, like Amazon, like UPS, they announce layoffs. Those layoffs, if they can sell the exact same quantity, but there's less overhead or there's less people, etc., you could increase the profits, potentially, if you keep the numbers the same, the top line. So I want you to kind of keep an eye on Amazon, and you got to understand that not all jobs are they're indefinite. Sometimes it was a job for a while, and then they built it, and it's time to move on. So Keep an eye on Amazon. I think we have to keep an eye on Apple because Apple is not just a breakout on a daily. That was a breakout on a weekly chart as well. And when you come back to this 3-year weekly chart, that's a huge U, okay, to say the least. So, you might say, well, it's already broken out. Well, with that little breakout, you could have some slight consolidation. If that can hold the 257, might get a bounce for that longer term. So keep an eye on that. With the Amazon, look and actually listen to the conference call and actually see what do they forecast going forward. They forecast the same sales. That's huge. If they forecast the same sales, could they actually do it and actually have potentially greater profitability? Now, I'm out of my time here today. The last one I'll just make mention of is QCOM. We saw QCOM with a pretty big bounce yesterday. Could this actually be like a little bounce setup after the push? The red candle, many technicians don't care about as long as we're above the 10-day moving average. Keep an eye on that. Now, Cameron May is going to be coming up next. Remember, if you have not subscribed to the Trader Talks channel, the Schwab Coaching webcast, I have no clue what you're waiting for. Smash subscribe. If you enjoyed today's session, if you want to become better at these 5 things, continue to come to these sessions, smash the thumbs up, smash it, okay? And that way other people can find it as well. Remember, with what we discussed, it was done for example, illustrative purposes only. Thanks to Barbara Armstrong. She'll be coming up later in the day talking about technical analysis. Join her as well. And this has been the class on Investing Master Series. And with that said, have a great day. Take care. Bye-bye.